guys, what's going on? This is Mr. Cosmic here at the Cosmic Trading Academy one more again. Today is July the 12th, 2022. The market is kind of making a little crazy fall today. We're looking at SPY options. And basically what's already happened here in the market was that it failed pretty good. It failed pretty good. And you can see right here, it took a really big dip. So let's look at the weekly, see what we come up with. And since it's already made the move, actually yesterday I placed the trade for this dip for it to fall. But because I did it so low, it didn't close, it didn't open up the trade for me. I didn't get filled. So that's quite all right. I'm still pretty bearish about the market, as I think many investors are. And sorry, today is actually July 13th. And so I'm going to look at SPY options, see what we got. I know a high. You can come down here and look at the 52-week high. Let's close this. Let's decrease this, and then let's go to the 52-week high. Well, I will. You can pretty much see where the lows are, But so what I'm looking at, I'm looking for a good spot to purchase. Probably do debit spreads, so that I use it to, as you guys might know by now, if you haven't been listening to this account, I typically keep this account at around $2,000, and then every time it hits 250 over, I just withdraw, and then pay bill with that money. So typically on a $2,000 account, probably looking over a turnover every month, once or twice a month. So it's $250 for me to $500 per month. So we'll just see how it plays out. So right here we see SPY at 377, 378 actually. So since I'm bearish, I'm gonna probably buy put. I'm getting a slow reaction. Every time I record, it seems like it slows down. But anyway, so as you can see, buying at 380 put. I'm doing it for November 18th, 2022. So I'm out there. I suggest that all traders who are doing this on an SPY never do it inside of a day or week or a month if you're doing a spread. SPY, based on my experience in the last 5 years, can hold a position usually for about a month. So just because it looks like it's bearish, SPY will hang around a certain area for a month before it makes a move. So for you to make a trade and think, unless you're doing day trading and you're getting in and out, or you're trying to scalp, then like for me, debit spreads allow me the time. And if you have 10 debit spreads on at one time, you have them staggered, so you make the money over time, and you just keep placing the next trade, so you're another month out and another month out. So that's the way I strategize. As a trader, you have to come up with your own strategy. So right now, this is 2,200 to get into this, to buy this put. So now let's look at what the selling the put would be. The low, 52-week low, I believe, is 363. So let's scroll down and see how much am I willing to pay. Now remember, when we sell a put, we get paid for it. So whenever I sell this put, it immediately will be subtracted off of the total cost of what I bought a put for. Okay, so now we're going down here. Now remember, when you sell a put, this is the share price. This median line, I don't know why it's not right on the line, but today it's acting weird. So just remember, whatever this number is, that's 1994. That's 2194 minus 19 if I was to sell or put here. Same thing, if I was to sell or put here at 1808, it would go under here, just act like you're putting a subtraction sign in the 1808 or whatever there. So, and that will tell you what your total price is going to cost you. So right now, just selling a naked put, that's what that would be called if I don't have any SPY stocks. So if I was to sell the stock, I would be selling naked. And the only way that the broker would allow you to do that is if you actually own 100 shares of SPY or more. If you don't, they probably won't let you, or if you have it in this amount in your account. Now me, I have that amount probably in my account, but I would never risk the whole entire amount on one trade. Because this trade is small, I generally never trade more than 10%. The rule of thumb is stay below 3%. Every trader knows that the reason why I've survived is because I don't throw it all in the basket on one trade. So that allows me to survive for the last 5 years. And although I never got rich and I have never been lucky, I can't really speak for people who have put their whole check on SPY or on crypto and got lucky and made a bunch of money. So that don't pertain to me. So here we go. Let's get right here. Let's figure out what we want to sell at. It's 370, 378. I mean, if I sold at 375, wouldn't be so bad. I think the potential profit would be about probably about $200, as you see. So right now, it would cost me about $200 to do this trade. Let's see what our expected profit is. Seems like it only does this when I'm using one of these recording. Okay, so maximum profit is about 300. I never go with the maximum profit. I always go with half of that. So whatever that, because I'm not going to wait until it gets way up here to try to take a profit. I'm taking profit somewhere in here, at least half or 3/4 of the way there. I don't try to wait till it maxes out, because that's when you inevitably get dropped, and then you end up losing your gains. So once I get probably halfway there, which would probably, as you can see, about 204, if you look up here, be about $200. So basically, what I'm spending is 1-to-1 ratio, which is okay with me. I do 1-to-1 ratio or I like to do 1-to-1 ratio or better. So I'm gonna risk 200. I gotta be being able to gain more than 200. The maximum probably can gain over here is 300. So that gives me room. So I don't think this is a bad trade. SPY is at 379 right now. I'm selling a put at 375. I break even at 355 on this one and break even at 358 on this one. And it's tricky. Chance of profit on this one is 65%. Now, sometimes when you're selling any kind of option, it's good to look at the chance of profit. Honestly, I'd prefer it to be down in the 70s as far as my profit potential. People like to go right here. I like to do 75% profit potential. But let's just see what that will cost me. If I did that, we're talking about $1,000. Yeah, $1,096 is what it would cost me. So in that particular case, if I want to have a higher percentage of chance of profit, but I didn't want to spend this much money, then naturally what I would do is go back up and look for or just go right here and cancel out this put that I was buying. And then after I cancel out that put, then I would look for the one to buy where I would get a better price. So with 379, where we're at, I know it's dropping. So let's go down and get it where we know it's affordable, somewhere around that price. So probably around 200. I like it around 200. So which means is 200 off 1,000 is $800. So I gotta find one that I'm selling for, or that I can buy for around $800. See? Mm, oh, no wonder. Okay. So, doesn't look good here because I'm selling one back. Yeah, I don't think so. Oh, yeah, buy. Yeah, I'll buy one right here. That's below. So that I wouldn't do. This wouldn't work because as you can see, the strike price is 335. I mean, I don't even. The low of the year was 363. So this is a big risk. You just could. I wouldn't even play in that arena. You see, so this is kind of trades that I was putting out years ago, and thinking that I'm getting a better deal. You see that the total credit. I get a total credit of $200 because I bought it less than I sold it for. So actually, so let's just put this one, take this one out. I'm sorry about that. And so 1200 is what I should have been looking at. I apologize. 1200, yeah, 1200 is what I should have been looking at. So that one cost 14. This one's about 1175. So really, 1200 put me at 350. Why would I do that when I know the annual low for SPY is 363? That's a low probability trade. So, I just simply wouldn't take it. I had to come up on this option that I sold to a higher price. I have to at least come up to 365 for it to even make sense. Because I know that the annual low, 52-week low is 363. So I'd be a fool to try to get into a trade. So here's 365. Let's sell this put. This is just examples, guys. And you see how you can play around with this and things that you gotta look at. 365. We're at 379. Remember, the annual low is about 363. So if I put it at 365, then I know it has a potential to go lower than this put I'm selling. You see, for November 18th. Okay, so now you see how much that I get credited for selling that put is $1,598. $1,598. Basically, that's $15 per trade, and because the option has 100 shares, it's going to basically put a zero, move the decimal point over. Basically, move the decimal point like a comma. That's what I like to remember. I go over one. And so it make it $1,593. Okay, so we know it's at $1,593. Now, what are we gonna sell for? What are we gonna buy for? So let's look at. I know I don't want to spend more than $200 on any trade because that's 10% of my account. So that means I can't be buying more than $1,786. You see what I'm saying? Now you get it, guys. Comment if you kind of get it. You get rest for if you're kind of confused. I'm kind of new at making these videos, trying to get better at it at time. What I definitely need to do is figure out why this moves so slow. Once I start recording a video. Okay, so here we are. Here's 17, which is essentially one strike. Well, not one strike, but one strike on the option above. So really, if that's the case, to me, it really doesn't make a whole lot of sense to go low, pay 200 and hope that it gets down to the 365 mark from the 379 mark. You can see up here. Why, if you're going to risk that 200, why are you going down so low? Because effectively the 200 will probably be the same if you go up higher, which gives you a higher probability of it going below the option that you're selling. Which means if I go up higher to 379, still cost me 200 and be closer to the price of 379, and then it goes below that price, I'm in the money. Okay, so let's give an example. Let's get out of here. And then since it's not really worth the risk of waiting on it to get way down to 365 and maybe below. If I'm gonna risk 200, why not risk it up here close to the strike price? Here's the strike price right here. You see what I'm saying? Here's 21 and 19. So that's $200 the same. Why would I risk 200 way down there hoping it gets low when I could risk it right up here And as soon as it drops below 375, I'll be in the money. So for example, I'll buy a put right here. That's $21 is cost, 2100 is costing me, right? And then I'm gonna sell a put. Let's see what this is costing to sell. You see? So that's $200 right there. Exactly. So why risk hoping that it's gonna get below, way down to 360s when I'm gonna risk the same amount and it get below right here? So that's to me, that's a better trade, a smarter trade. It makes more sense. I don't know if you guys, how you guys feel about it. So even though the chance of profit on the put I'm selling is lower, but still, I don't entirely agree with that because where we're at right now, I got a higher probability of being in the money right now. Because once it drops below 375, I'm in the money. You know, so. Well, actually, I'm in the money now because I'm buying in the money. I apologize. I'm buying in the money. So anything is already in the money because where I bought is at 380 and where I'm selling is at 375. I'm in the money because the strike price is below my option. So I'm already coming in the money. This should actually be in the green. The only reason why I think it's not is because of the one that I'm selling. So anyway, maximum loss of that. So maximum loss is 200. Maximum profit is 300. So when I get halfway in here, I get about 179. Right there, see that third, about a third way through, it's at 200. I can make my money back. It's dropped down to 194 cost. I like to put in an option a little bit lower price. It doesn't always make it, and I don't always get filled. I mean, the way I trade now, I hardly get filled. I probably only get filled one out of every, I would probably say 7 trades, give or take. Depends on how bad I really want to, but trust me, I'd rather get filled at the lowest cost and then get in the money fast than, see the maximum profit, yeah, it's swinging. So I definitely got to get it at a low price. So now it's at 197. But I'm going to show you guys. I'm going to go ahead and take this trade and it's just an example, guys. You know, you don't have to copy this. It's just to instruct and show. So now let's just do one contract, which means 100 shares, one contract. You see now they ask you 205, but see here's the low, and here's the one of the highs. So the medium is they're saying like 197. To me, I don't like to go to the medium, especially on SPY. If you watch it enough, this option's cost swing $30 easily. So you see that there's 178. You see, this is and then now and there's 190. See, that's how important that is to watch. Give it a second, take your time. Don't be in a rush to get that trading. Pay attention to how this fluctuates because this could be the difference from you making profit and you making nothing. Now I know it dropped to $1.78 for cost. Why would I pay $1.99? That's $20. That means I got to swing $20 just to make some money first before I even start getting a chance to make a profit. Why not buy that 178? $20 below the median price. Really, I'd like to go like 173. See, so and I might not get filled, but you know what? I'd rather get filled at 170 get filled at 199 just to say I got into the contract. Getting to the contract don't mean nothing if you don't make no money. So I'm doing 173. I feel better at that. Good for the day. If it goes through, great. If it doesn't, I'm not mad. Tomorrow's another day to place another trade. If you do 3 of these a day, 4 of these a day, 5 of these a day, then you have a high, then one of them probably is going to go through. If you find that none of your trades are going through, then just maybe tweak it a little bit and go up a couple of dollars, $5, until you start seeing your trades coming through on your particular stock or index or ETF or whatever it is that you're using. And then you'll know where your sweet spot is at. Okay, you'll see that, if the trade gets filled at when I'm $20 within $20 range. Or it's filled when I'm within a $5 range or $10. So I know that I could possibly get filled within $20 or $30 on SPY. That's been my experience. So I prefer to go with that. See, now it's dropping. So I'm going to go ahead and submit it. I would rather get it at 173. and I believe it has a potential. You see, it was at 199. Now it's at 189, and I believe it can go down to 173. That's where I'm going to take it at. That's how much I'm willing to pay for that. Done. It didn't get filled yet. But listen, I don't even look back at it. I check on it. If it pops up saying it got filled, I'll get a message. And I just keep on going looking for the next trade. You see? So guys, hey, I've stretched it out a little long. So I hope that helped and stuff. This is Mr. Cosmo. This is Cosmo Training Academy. We trading options over here. We're doing entrepreneurial things. We rent cars. We talk about real estate. We talk about vacations and traveling. So anything you guys want to do it, I've been doing this for 5 years. I wish you guys all the best of luck. I might even start looking at showing you guys my TD Ameritrade account and as well. And we'll go from there. Also, with my I do forex trading. I do currency trading. So as you can see, look at my account. 190 today. I'm up $148. It's 1,093. So this is the game that I play, and my buying power is $500. So this is the game I play, and I still have $500 to play with right now. And I'll probably just look for something else, maybe QQQ. Right now, I'm trading a lot of SDS, SQQ, SDC, but I'm staying in the same lane. Don't be all over the place because you think something good. Trust me, it doesn't work. You need to know. You need to be intimate. Whatever those stocks are, they need to be your best friends. I know I follow SPY. I follow QQQ. This is the inverse of QQQ, which is selling it short. So that's what I follow. And I follow these same ones all day long. I don't really care about what Tesla doing. I don't care what Microsoft doing. I don't care because that's not what I do. If you're a tech person and you follow Microsoft, great, but follow Microsoft. Don't be following Microsoft and trying to just follow gold. I mean, if you do, just keep it at 2. Keep it at 2 and you'll be great. Remember, you can get 1,000 trades with the same 2 stocks. So it's not like you can't trade several different trades on one particular stock. So, that's it, guys. I'm gonna let you go. Hey, comment, like, subscribe if you think that this is valuable and it helps you. And I hope my commentary really works. Somebody told me that I should really be trying to share what I know, and that's what I'm trying to do, guys.